the US-China trade war has escalated into a full-blown economic confrontation. In a move that stunned Washington and sent shockwaves through global markets, 32 of China's largest corporations have announced sweeping retaliation measures against American companies operating on Chinese soil. According to Bloomberg and Financial Times, this is the most aggressive response yet in a trade conflict that has been brewing for years. At first glance, the retaliation seemed sudden, almost explosive, but insiders in Beijing reveal it was months in the making. Behind closed doors, senior officials from China's Ministry of Commerce and executives from the country's leading technology, energy, and manufacturing giants have been quietly meeting since early spring. Their mission? To design a coordinated economic counterstrike in case Washington tightened its trade restrictions on Chinese firms. The final trigger came last month when the US imposed sweeping tariffs on Chinese electronics, telecommunications equipment, and green technology exports. The Biden administration framed these measures as a matter of national security, accusing Beijing of using state-backed companies to dominate critical industries and undermine global competition. But Beijing saw something else, an economic assault aimed at stifling China's rise as a technological superpower. According to insiders quoted by South China Morning Post, Chinese leaders concluded that Washington's goal was not just fair competition, but economic containment. That realization hardened Beijing's stance. In an emergency session of the State Council, President Xi Jinping reportedly told ministers that China must fight back with precision and strength to protect its economic sovereignty. And so, the retaliation began. The 32 firms involved span nearly every sector of China's economy: energy titans like Sinopec, technology giants like Huawei and ZTE, major banks, shipping conglomerates, and even pharmaceutical leaders. Their measures include canceling contracts with US suppliers, shifting purchases to European and Asian partners, and in some cases, banning American software and equipment from their operations entirely. One Chinese official described the move as the economic equivalent of cutting off oxygen to certain US industries that rely heavily on Chinese markets and supply chains. The reaction in Washington was immediate. According to Politico, Treasury Secretary Janet Yellen held an emergency call with Wall Street CEOs, warning that the standoff could rattle global markets if it spirals further. At the Pentagon, defense analysts expressed concern that restrictions on rare earth minerals, many controlled by Chinese companies, could disrupt America's defense manufacturing base. Analysts at the Brookings Institution say this marks a dangerous turning point in US-China relations. In the past, trade disputes were often limited to tariffs and negotiations, but this coordinated retaliation by dozens of state-linked corporations signals something new. Beijing is willing to weaponize its vast economic resources in a direct challenge to US power. Already, the fallout is spreading. US tech stocks with heavy exposure to China, companies like Apple, Tesla, and Qualcomm, saw billions wiped off their market value within hours of the announcement. Shipping giants are bracing for delays as Chinese ports prioritize Asian and European carriers over American ones. Energy traders fear Beijing could slash purchases of US liquefied natural gas, redirecting them to Russia and the Middle East instead. For years, economists warned that a full decoupling of the world's two largest economies would carry catastrophic risks for global growth. Now, with 32 Chinese firms striking back, that scenario no longer seems hypothetical. As one veteran analyst told Reuters, this isn't just about tariffs anymore. It's about economic warfare, and the whole world will feel the consequences. As news of China's coordinated retaliation swept across global markets, Washington's response was nothing short of frantic. According to Politico, senior officials from the Treasury Department, the U.S. Trade Representative's Office, and the National Security Council convened an emergency meeting within hours of Beijing's announcement. Sources describe the mood in the White House Situation Room as tense and combative, with some advisors urging immediate countermeasures, while others warned against escalating a trade war that could spiral out of control. Secretary of State Antony Blinken reportedly placed urgent calls to European and Asian allies, seeking their support in condemning China's actions. But diplomats in Brussels and Tokyo were cautious. Many U.S. allies, heavily dependent on trade with China, were reluctant to take sides in what some European leaders privately called an economic hurricane between two superpowers. Behind closed doors, Beijing sent its own signals. According to South China Morning Post, Chinese officials quietly reached out to major European capitals, offering expanded trade deals and investment partnerships, on the condition that Europe remain neutral in the US-China confrontation. In Paris and Berlin, analysts say this strategy is already sowing divisions within NATO as European leaders weigh their security ties with Washington against lucrative economic opportunities with Beijing. Meanwhile, Wall Street was in chaos. Stock futures plunged as investors braced for what one J.P. Morgan strategist called the most serious trade disruption since the 1970s oil crisis. Tech giants with heavy exposure to China, Apple, Tesla, Qualcomm, lost tens of billions in market value in a single trading session. Shipping and energy companies issued profit warnings, fearing Beijing might redirect critical supply chains toward Asian and Middle Eastern partners. In Congress, lawmakers from both parties demanded a tougher response. Some Republicans called for new tariffs on Chinese imports, while progressive Democrats warned that further escalation could crush American farmers and exporters already suffering from shrinking access to Chinese markets. Yet behind the public rhetoric, U.S. intelligence agencies painted an even grimmer picture. A leaked report from the Office of the Director of National Intelligence, cited by Reuters, warned that Beijing may soon target sectors critical to U.S. national security: rare earth minerals, medical supplies, and advanced battery components, materials where China dominates global production. Analysts at the Brookings Institution say Washington now faces a strategic dilemma: retaliate aggressively and risk economic decoupling, or seek a negotiated settlement before markets spiral into full-blown panic. As one former Treasury official told the Financial Times, this isn't just about trade anymore. It's a struggle over economic power, supply chains, and technological supremacy, and neither side looks ready to back down. As Washington scrambles to respond and Beijing doubles down on its economic countermeasures, the rest of the world is bracing for what many economists now call a global trade earthquake. According to Bloomberg Economics, the coordinated retaliation by 32 Chinese corporations is already disrupting global supply chains. Shipping costs across the Pacific have surged to their highest levels in 3 years as Chinese ports prioritize Asian and European carriers over American ones. Semiconductor analysts warn that U.S. restrictions on Chinese tech firms and Beijing's retaliatory bans could fracture the global electronics industry into two competing blocks, one dominated by Washington, the other by Beijing. Energy markets, too, are feeling the shockwaves. Beijing's state-owned energy giants have reportedly begun renegotiating oil and gas contracts with Middle Eastern suppliers, shifting more payments into yuan and euros rather than US dollars. If this trend accelerates, it could weaken the petrodollar system that has underpinned US financial dominance since the 1970s. Meanwhile, American exporters, from soybean farmers in Iowa to chemical manufacturers in Texas, are facing plummeting orders from Chinese buyers. The American Farm Bureau Federation warned this week that prolonged Chinese import restrictions could trigger a new wave of bankruptcies across rural America, similar to the fallout from the 2018 trade war. International organizations are voicing alarm. The World Trade Organization issued a rare statement urging both Washington and Beijing to avoid reckless escalation that could push the global economy toward recession. The International Monetary Fund estimates that a full-scale US-China trade decoupling could wipe out $1.5 trillion in global GDP over the next 5 years, yet Beijing appears unmoved. Chinese state media framed the retaliation as defending national dignity against what it calls US economic bullying. Editorials in the People's Daily argue that Washington has repeatedly weaponized trade, technology, and finance to contain China's rise, and that this time, Beijing will not back down. Back in Washington, voices of caution are growing louder. Some US business leaders warn that losing access to the Chinese market, America's third-largest export destination, could cripple entire industries. Yet hardliners in Congress insist that standing firm against Beijing's economic aggression is the only option, even if it means short-term pain for American companies. Analysts at the Carnegie Endowment for International Peace warn this standoff may mark the beginning of a long-term economic Cold War, with global supply chains realigning along geopolitical fault lines. As one senior European diplomat told the Financial Times, "We are watching the birth of a divided global economy, one half tied to Washington, the other to Beijing. The consequences will shape the 21st century." For now, markets, policymakers, and ordinary citizens are left wondering, how far will this economic war go? And what will the world look like when it's over?